You're listening to Fund Shack. I'm Ross Butler, and today my guest is Matt Hougan, CIO of Bitwise, the company that pioneered the first crypto index fund. Previously, he was CEO of ETF.com, a data analytics, media and conference business, and chairman of Inside ETFs. In other words, he was a very early mover in one financial technology that proved to be a winning concept, ETFs, which I think is rather relevant for the discussion we're going to have. Matt, I've wanted to cover Bitcoin on this show for a long time, actually, and I hesitated. And I think I was wrong to hesitate, but let me explain my thinking. What we cover on FundShack is typically it's alternative assets. But what that really is just a euphemism for non-public assets. So we're coming at it from a private markets perspective. But I've come to realize that Bitcoin it's almost the quintessential alternative asset. One way of looking at it is as a kind of an alternative commodity. And so it ticks that box. And I also think that it's actually possibly the most private of assets there is in terms of how you hold it. So it ticks that box. But the other reason I was hesitant is that private markets has historically been an institutional game. And Bitcoin's been the opposite. It's been a bottom-up kind of retail game. But the interesting thing, which has only really occurred very recently, is we've seen private markets become more and more democratized at the same time as Bitcoin is becoming institutionalized. So I thought, well, now is the time, we've got to do it. And I looked around to see who I could interview. I couldn't find that many people that looked relevant, but you were top of my list. So I'm really delighted that we're going to have a conversation.
Well, thank you for those kind words. And that's actually a great framing. I think that is exactly what's happening. As you mentioned, most alternatives going downstream into retail and crypto moving upstream into institutional. I love the framing. Really excited for the conversation.
Great. Well, to what extent are you seeing that? How much is the penetration of Bitcoin or some form of Bitcoin exposure into institutions and maybe the larger corporate sector?
Yeah, it's happening very fast. I'll give you a few proxies to measure how quickly it's happening. Bitwise primarily serves that audience. That's the audience we were built to serve. It's the audience our sales team and our research was designed to facilitate. Our own assets under management for the first 6 years of the business grew to be about $1 billion. And in the last 18 months has grown to be 10. So it's happened at that rate from that perspective. You can also look at the ETFs, which launched in January of 2024. Those have been the most successful ETF launch of all time. And not just by a little bit, right? The previously most successful ETF launch in the US was the NASDAQ 100 Qs covering technology stocks. They gathered $6 billion in their first year. Bitcoin ETFs gathered $37 billion. Now, that wasn't all institutional money. Maybe a third of it was institutional money. But even if you ignore the part that was retail and only focus on the institutional, it was still the fastest ETF launch of all time. So we're early in the days of institutional adoption. Most institutions are still just sort of figuring this out, but the pace is remarkable. And I think in a few years, maybe even a year or two, Bitcoin will be a normal part of many institutional investor portfolios.
So it seems to be there was some pent-up demand. So maybe we can step back slightly. Can you explain perhaps, why was there this demand? How are institutions viewing it? What is Bitcoin from an institutional perspective? What role does it play?
Yeah, I think there are two ways to answer that question. The first way would be to talk about it as an asset. If you took Bitcoin and stripped the name from it and removed all the emotion that comes with the words Bitcoin or cryptocurrency and just looked at it as an asset, what does it have? It has high historical returns. It's literally the best performing asset of all times. It has relatively low correlations to both stocks and bonds. It's volatile and it's liquid. Now, you cover a lot of alternative space. If you can package together high returns, low correlations, volatility, and liquidity into a single wrapper, of course, many institutions want exposure to that. So you have to ask, what was keeping them from accessing it? Part of it was new. And so you have to be a little bit skeptical of historical data, whether it will continue into the future. But a lot of it was reputational and regulatory risk. Almost every regulator around the world was skeptical of crypto until about 18 months ago. But we've seen massive progress, whether that's ETF launches, whether that's the US SEC pulling back on lawsuits against the industry. Now we have countries that own Bitcoin as a strategic reserve. So we've removed that gating factor. And now institutions are able to look at this asset with high returns, low correlations, volatility, and liquidity, and say, wow, adding 1 or 2% to my portfolio can really increase my risk adjusted return. So I think that is part of it. The other part of it, which is equally interesting, is it's just a really important technology, right? At the back end of what a blockchain creates, blockchain is the technology that underpins Bitcoin. Blockchains create, for the first time in history, the ability to own digital property and the ability to move digital property over the internet. Those are big ideas. If you think about digital property rights as an idea, do you think that will be important in the future or not? I think a lot of people see it as one of the more important technological advances of the last 20 years. And I think we're just in the early stages of figuring out all the use cases. So whether it's like fundamental use case or an asset, it's extraordinarily attractive and every institution needs to have a view on it.